Are we ready for this change? As an industry, are we ready for the future of banking? The industry has never changed faster than it is today. It also will never be as slow as it is today. Are you ready for an industry that is moving faster than it ever has because of the consumers? Are you ready with data and analytics, which is really the foundation of all this change? Is your data manageable? Are your reports simply internal reports, or are they already creating great customer experiences? The consumer today is looking for the easiest ways to do banking. This is not an evolution, this is a revolutionary process. We have never in the industry seen so much going on, with so much competition, with so many different ways of communicating and working with customers. So as financial institutions and as individuals, you need to ask yourself, are you ready to embrace change, to take risks, and disrupt yourself? Because at the end of the day, that is what you have to do as individuals, as professionals, and as organizations. And if your culture does not support that, you have to decide, am I at the right place? Today's digital consumer is wanting things as quick and easy as possible. They are always multitasking. They're always looking for simpler ways of doing things. This is why P2P payments such as Venmo, PayPal, and others have taken off. It's one-click transfer of payments. The digital consumer, the millennial is a digital consumer, but not all digital consumers are millennials. So we have to decide, how do we reach these people with apps that are as easy as the P2P payments? We also have to realize that technology is being used more and more to simplify the process. Everything from going to a mobile banking app and searching for a name on your address book to make a payment, to using voice to find out your balances or to make a payment. This is only going to increase as we talk about AI, as we talk about robotics, as we talk about just digitalization of the banking experience. We have to be ready as organizations and as people to embrace that change and to realize that technology is only going to make it easier for consumers to simplify their life, but also for competitors to become neobanks or to offer banking services. What we have to determine is, are we ready to provide an ecosystem similar to Uber? I went to New Orleans 2 years ago, and at the time, Hilton had just built a relationship with Uber where if you made a reservation at Hilton, they would set up an Uber car to pick you up. Now, all of you have probably taken an Uber at some point in your life. You realize it's not that hard to get an Uber. So I didn't know what the benefit would really be to have a guy waiting for me at the time I get off my plane, but it was kind of neat. My plane was late. I got a call immediately from the Uber driver that says, I'm here waiting for you. Just come down to this spot, I'll pick you up there. I thought, that's pretty cool. 5 minutes later, I got a ping on my phone. It was Hilton saying, I'm glad you got your car picked up. Your digital key card has just been sent to you on your phone. You don't need to check in. This will open your door in your hotel room. To check out, you just push the button and say, I'm done, and we'll know the room's available. I thought that's one cooler item than that. Then the next thing, I got a thing from Uber Eats, which basically is the partnership between Uber and OpenTable. And what they said was, we know you're staying at the Hilton tonight. Here are 3 restaurants in the area similar to what you've eaten at in the past that I think we think you'll like. So what Uber did there is they built an ecosystem. And since then, they've added things like Ticketmaster, I should say, where if you buy a ticket at Ticketmaster, part of that application says, do you want to order an Uber at the same time? That's an ecosystem that we as bankers could be at the center of, or we can be at the outside looking in. As we surround ourselves, we realize that Starbucks right now is one of the bigger deposit takers in the country. They're bigger than many banks. That Uber is opening accounts for every driver. Are they offering banking services? I think so. At the end, though, we have to determine, Are we willing and able to provide an Amazon-type experience? Because consumers no longer are comparing our banks to other banks. They're comparing our experiences to experiences they get everywhere else. It is totally and thoroughly unacceptable that my dry cleaner knows more about me than my bank. I'll give you a case study. 3 weeks ago, went to my dry cleaner and they said, "Mr. Marous, good to see you. Have you become a doctor?" I'm going like, I have no clue where this is going. It must be a joke. She goes, I said, "Why?" She goes, "In your laundry this week, there was a doctor's smock." And I started laughing. I said, "That's interesting. Two things. Number one, I would never have had it dry cleaned if I obviously threw it in with other laundry, but we had celebrated my niece just becoming a doctor and we had smocks." She goes, "Oh." Then I thought about that. I'm thinking, if my bank, if I changed my forename to doctor instead of Mr., my bank, I do believe, would notify me, but it would be to say, you have to come in and sign legal documentation that says you're really a doctor. But they would not call me and say, "We'd like you to set you up with the right private banker to start off your practice successfully." Why? Amazon knows what I buy and knows what I'm going to probably buy next. Why does my bank continue to clear checks that are written to my mortgage company, my basically credit union that doesn't accept anything but checks? Why have they accepted them for the last 10 years and never once said, "We can give you a better rate"? Why has my business bank never realized that twice a month I write a check on their account to send it to my West Coast bank? Why do neither side say, "We can make this transfer better"? Because I'm writing a check to myself, taking a picture of it. I've never written more checks in the world, and it's simply to move money fast and efficiently. 2 weeks ago, I realized my business, the Digital Banking Report, that's a subscription-based business, was accepting payments by credit card. When I started the company, nobody would give me, at the time, the ability to process credit cards. So you had to sign up for a thing called Authorize.net. Authorize.net is a risk-based platform that says, we're going to take a reserve from every credit card payment in case anybody reverses their transaction. Well, the business was already 10 years old, or actually 20 years old, and never had a return credit card payment, but I was a new owner, they didn't know me, and they take a reserve. That reserve built up to $40,000. I never had a return credit card payment. And then all of a sudden I realized, since we put PayPal on our payment site, every banker is using PayPal to use their credit card to pay for the subscription. I no longer needed Authorize.net, so I got my money back. I was scared that I might have been the person that put them under, that basically I'm taking money that doesn't really exist, but I got it all back. PayPal simply takes a merchant fee, makes it easier for the consumer to pay, and oh, by the way, in the meantime, I'm making all my payments for my business using my PayPal account. So if I somehow, is my primary financial institution really PNC, or is it PayPal? All invisible, but all done for the simplicity, the reason of simplicity. Because the one thing I can't replace is time. That's true with every consumer. What we're looking at now is a partnership between fintech firms and banks. Why are those partnerships being developed? Because people realize that the banking industry may not be the best at innovation. They're thinking outside the box. And so companies of all sizes are finding other companies that can provide a service that they can't provide. Well, that's just the first step. The future is going to be looking for companies outside of financial institutions using open banking APIs to build organizations that will build and provide the best of class services. If you have a chance, you don't know much about open banking because it's obviously stronger in the UK, look up Starling Bank. Starling Bank has a checking account and about 25 different partnerships that provide best of breed services to their customers, some of which compete with each other. It's not a monoline business. Everything from insurance to mortgages to interest to international payments, all with a very simple, more mobile-first interface. What we want to look at is the fact that, as I mentioned, the ecosystems that we're talking about will not just be with banking services. Now, the question is, Will the banks be in the center, or will Amazon, Google, Facebook, or some other unknown company? Because they know how to process data and make the process and transaction easier. What would happen if Amazon said, we don't want to be a bank, but we want to offer checking accounts? So they decide they're going to go the route of the prepaid debit card. Prepaid debit card that opens your account, that provides you overdraft protection, and allows you to deposit and make payments directly from Amazon account anywhere. Or let's say they also say, to get your account, we're going to give you a free Amazon Prime account, and we're going to offer it to every Amazon Prime member and say, we're going to make that cost free. Why? Because they realize the customer's going to do that, take advantage of that. Oh, let's say something different. Maybe 1% off of every purchase you make, and we'll pay you interest. The reality is Amazon has the resources and the profitability to provide an offer for a banking service that we can't respond to. We don't have the retail base. And that's what Alibaba and Tencent in China are doing. They're combining retail with payments, with customer service on a digital platform. What we realize also, the future of banking is about design. People who love Apple because most of their stuff is just plain cool. Yeah, there's flaws. They're not the first ones to come out with it. But how cool is your mobile app? How many people would like to have your mobile app judged every time somebody uses it with a star system that Uber uses? Don't know many. What is the best platform out there? How can you take something away as far as number of steps needed to make the overall interface with the consumer better? The consumer wants a GPS view of the future, not a rearview mirror view. They don't want to be told they just had an overdraft or an NSF. They want you, their financial institution, to say, based on your transactions in the past, even though you have money in your account to pay for what you want to buy right now, this may not be a good idea because you have a mortgage payment coming up next month, or next week. I liken it to the difference between a 2006 Toyota and a 2016 Toyota. My son drove a 2006 Toyota back to school a winter ago. He got in an automobile accident. He hit the back of a semi. Nobody was hurt, but it completely destroyed the side of the car. And I realized that he did not know that accident was going to happen until he heard the crunch. For whatever reason, got distracted. The driver in front did whatever they were going to do. But I just drove a 2016 Toyota. I don't know how old any of your cars are and what kind of technology you have, but that 2016 Toyota kept me in my lane. Typical male, I let go of the wheel every once in a while just to see if, it really worked. But it did say, put your hands back on the wheel. It knew I was a male, I think. And then it also, I put it on cruise control, and it would slow up when the car in front of me slowed up. Keep a safe distance. It would warn me when I went out of line by audio as well as physical movement of the car. When I was coming back from the trip where I drove the 2016 Toyota, I was going on an off-ramp and I was in an area I wasn't really familiar with, so I was probably going off outside the line a little bit, still trying to figure out where I was going. After I got through that labyrinth of on and off ramps, the car had a little coffee cup in the center of the dashboard. It said, stop for coffee. Stop for a rest. Now, again, typical male. I said, I'm gonna fix this. I'm just gonna drive really carefully for the next 20 miles and have that light go off. Well, the light doesn't go off. You gotta stop the car and get out of it. Light goes off. It takes your word for it after that. But that's what a consumer wants from banking. They want you to know them, look out for them, and reward them. They expect that because they're getting it from their other partnerships through unique designs, through digital design. What we're talking about is a transition from a world where the branch was the primary source and digital was the secondary source to a time when the physical now supports the digital. How much do you use your branch for to train consumers on how to better become a digital consumer? What kind of incentive do you have in place to make sure your employees don't feel uncomfortable with consumers not coming to the branch anymore? I will tell you right now, we do studies, a lot of companies do studies, PwC does studies. Some of these studies say, don't worry, the branch isn't dead. People want to open accounts in a branch. I say hogwash. 9 times out of 10, number one, we haven't informed the consumer that they could ever do it digitally. And for those people who want to do it digitally, we don't allow them to. Most institutions say you can go through all this process, but you got to come in to fund your account, to sign a signature card, you can get into that for a day, or to make a deposit. The reality is none of those things have to be done in person, but we break down the system. Now, what's even more interesting is that we incent the employees of the branch to make it so we never knew this person started digitally. Because I go into the branch, I say, Mike, I want to open an account. I got all the way through it. I only got one more step to go. I want to make a deposit. You go, hey, Jim, glad you made it in. I want to make sure it's done right, and I want to make sure you're taken care of. If you have a couple extra minutes, I'd like to go through the information and make sure you have it all right. Now, number one, he doesn't even see digitally on the screen what I've done because your bank doesn't tell one channel versus another channel where you've been. So he's starting from scratch. He is given an incentive to sell me a branch account. And most banks, because they only measure last touch attribution, when I'm finished opening the account, nobody knows that I started digitally. And I paid somebody to say, you opened it in the branch, that's the channel you prefer. Are we forcing people into a channel that they don't know or they don't prefer anymore? How many of you have ever said, you know what, I'm going to the branch today, I'm looking forward to it? Or do you say, I got to go to the branch today, I got to go to the bank today, I have to, I need to. Not many people say, I want to go to the branch today. Not different. I have an extra neighbor, a 14-year-old, 2 years ago, came to me and said, Mr. Marous, do you accept Square Cash? He was cutting my lawn for me. I said, I only accept it, but I talk on it, I speak on it. I said, why? He was, well, can you pay me with Square Cash? I said, sure. I said, but why? He goes, in the past, you paid me with cash and with checks. I appreciated that, but I don't want to go to the bank. I don't want to go to the bank. Point blank. Millennial, actually a Gen Z. How many people are really like that? How many people use mobile deposit capture so they don't have to go into the bank? At the end, we're going to be looking at new digital engagement models. It's probably not going to include goggles, but it may not include the phone. I mean, think about it. How clumsy and non-user friendly is the phone compared to a voice, using Alexa device? But it was just a short while ago he said, I want to use my phone because my iPad or my laptop isn't as convenient, as flexible. We're going to move to new devices. Are you building for mobile? Or are you building for digital? What we also want to look at is the future work's going to change. My comment I said is, are you ready to accept, embrace change, take risk, and disrupt yourself? The future work is going to change. But it doesn't mean employment has to go down. Mike's written quite a bit about this. What we also have to look at is, just as we're getting used to digital, the consumer wants a more human interaction instead of more digital. A bank in Poland made it so that a farmer could now do everything on a touch screen that they provided to them. And they could connect now, instead of with their banking officer that would come out once a year to talk about their crops and the lending they'd have to do, they now connect them with 7 or 8 different specialists on the crops he's raising, on weather, on different solutions, and on lending, and they're always proactively saying, oh my gosh, the weather's going bad, this farmer probably needs money because he's not going to have the output that he thought he'd have. What does that do? It makes it so the farmer actually is seeing a better array of people that don't have to come to his house. That farmer didn't want the branch. He wanted personal interaction. He wanted the bank to help solve his problems for him. Digitalization provides that on a human level. Siri and Alexa, voice. That's a great consumer example of how consumers want human interaction, something that's more human, a voice that listens, sometimes all the time. I kid about the fact that I have 3 different devices on my desk, and invariably one's listening. Sometimes I think they're talking to each other, but But I'll say something in conversation. A couple of days later, I realize I'm being targeted by Facebook or by somebody else with a product around which I had just talked about. My latest was I had talked a lot about avocados, and all of a sudden an avocado slicer shows up on Facebook. I buy it. My sister-in-law, who lives with us, said, "It's not that hard. Avocados aren't the hardest thing in the world to manage." Why did you do that? Oh my God. All of a sudden it hit me. I'm going, because I got targeted on something I said upstairs during a conversation. This is Rachel. Rachel is an interactive chatbot that is more human than anything you've ever seen. I've seen this in action. DBS Bank in Europe now is using this as part of their customer service team. It's a little freaky, but for many people, it's better than dealing with the chatbot, which is just text. They're still testing it, but it's very interesting how humanized it gets. We also are looking at the fact that we're really talking about the fourth industrial revolution. We're talking about a revolution, an evolution, and a new period of change for the future of banking. Banking ecosystems are going to change. The way we bank, the way we deliver services, the way we market, the way we do technology, the way we manage risk are all changing. There used to be a saying, you're either on the train or off the train. Well, the train no longer is stopping at the station, and it's going faster and faster. You need to get on the train. What we have to realize is, are you ready for the future of banking? Are you ready for all the changes that are going to happen no matter what we do? Are you ready? It's not proceeding. Well, I'll tell you what I would have done. There's a countdown clock. As I wrap it up, I want to ask you, are you on a personal and business level ready and willing to embrace change? Truly enthusiastically embrace it. Are you willing to do that with your employees if you're a manager? Are you willing to set a culture that says change is good? Are you ready to take risks? Unfortunately, banking traditionally is filled with non-risk takers. That's why we got hired. I was told banking is a great industry to be in. It's not much risk, not a whole lot of change. You can get a good career, you're respected in the neighborhood, and you get promoted through the ranks based on tenure as well as skill. So that's a pretty good deal. Who would hire somebody like that today? So are you willing to take risks? And most importantly, are you willing to disrupt yourself? Look to the left and right of you. The three of you, two of you are going to be disrupted in the next 5 years. It's a fact. One of the two of those people will do it themselves. They'll self-disrupt. The other one is going to find out when it's too late. There's one person, that three, that will be able to have their job pretty much as it is today, 3 to 5 years from now. The real question is your organization the same way? Are they ready to disrupt themselves and change for the future the way the consumer is demanding it? Are you willing to build partnerships, do new things, and look, instead of making excuses as to why we aren't doing something, doing the something that's going to make a difference? Thank you.